So what is the FX market and why do traders such as me trade it? Well, in a way, it's just a collection of computers which are interconnected and they buy and sell orders. They submit the prices at which they're willing to buy and they're willing to sell. It's a load of interconnected banks, as I explained to you. And why do we trade it? Well, there's a whole load of brilliant reasons to trade it, which a lot of private investors just don't know. So let me run through some of them for you. First of all, there's no commissions. Virtually no broker, FX broker nowadays, charges commissions. There's no middlemen. You might say, well, wait a minute, what's the broker's job? Well, the broker's job is to just provide the online platform with which you connect to the bank. So how do they make their money? Well, remember the spread that we discussed in an earlier lecture, the difference between the buy and the sell price? In the same way, the guy who sells you your currency at the airport, that's how they make it. So the transaction costs are incredibly low. The market's open 24 hours a day, virtually 7 days a week. It's actually about 5.5 days a week. No one can corner the market because there's not a central market. There's nobody big enough. It's a $5 trillion market, remember. There's something called leverage, where $1 in your account will actually control up to $200 out there. Now, that can be a double-edged sword, but it also means that you can make more money with less money to begin with. High liquidity, what does that mean? It means you're trading in something which moves a lot. Movement means potential profit. If something just sits there and you can't buy and sell it, and the price is fixed, then you can't make profit, of course. But FX has high liquidity. Also has low entry barriers, as I explained earlier. A computer is all you need, and all the online brokers give their trading software for free. How good is that? But let's just look at some of those times again. Look at the hours at which the various markets open here. What you basically see is that you've got the opportunity to be trading not just like with stocks, where it's only when the market's open, which is pretty much 9 to 5 with the stock market. But with foreign exchange, you can be trading pretty much 24/7. You'll get a bit of a break on Saturday and a little bit on Sunday as well, but not much. So in other words, it fits around your calendar, around your time frame, and you don't have to fit around it, which is one reason why, as I showed before, you're looking at $5 trillion in trading volume compared to the stock market. This is why it's better than the stock market, because there's far more opportunity. And in case you're wondering, which then are the currencies that people find most popular? Well, the US dollar, the euro, the Japanese yen, and the pound. If you look at those top four, any combination of those is going to be the most traded. They're the ones where the most profit's going to be made. Later on, in future modules, I'm going to show you exactly how and in which currencies and at what times retail investors have made the most money, so you can copy those currencies and at those times. Because there are some times and some currencies which are more profitable for you, the retail investor, the private investor, than others at other times. Why participate? Well, this article sums it up, really. The global average daily foreign exchange trading volume has simply soared in terms of billions of dollars. Things in the markets don't soar unless there's money to be made, and that's why we want to get in on the act, and I want to teach you how to trade foreign exchange. Like I said throughout all these lectures, I tend to run through them pretty quickly so you can pause, and that's the benefit of this, because in future when you go through them again, then you might not need to pause, and so I try to keep them tight and quick. So I'm going to move on to the next one.